G'day and welcome to this week's video. My name is Ashley Rowan and I'm a financial planner with Consortium Private Wealth. In today's video, we're going to be looking at investing within superannuation and what options are available to you. Now, before we kick things off, a quick disclaimer to state that what we're talking about today is just pure general information only and does not apply to anyone's specific situation in particular. Now, to begin with, we need to choose the right investment option that's applicable to your situation. So if you do not make a nomination, and most likely within an industry super fund, your default fund will be most likely a balanced option. And that balanced option may give you approximately 70% exposure into growth assets and 30% exposure into defensive assets. Now, you've got to understand what your risk comfort level is. So essentially, what is your tolerance towards investment risk? Is a 70% exposure into growth assets appropriate or not? And what advisors do to help sort of understand a client's risk tolerance levels, we conduct a risk profile questionnaire. So a series of questions to understand that if we're experiencing volatile markets, how comfortable does that sit with you? Are you a growth investor, or would you be preferred to be more of a conservative investor? So you've got to understand what type of investor you are, and then you can essentially select an option or a number of options that cater for that particular risk profile. So, understanding your growth versus defensive assets makes a big part to choosing the right investment option for you. Now, there's two particular types of superannuation funds. They can be split up into industry super funds. So, for example, an Australian super or a Rest super, just two of many examples, versus your retail options. And that could be in the retail space. You're looking at the bank. So, for example, Colonial First State, MLC, and a number of others. The other opportunity there is self-managed superannuation funds, but we won't be touching on that today. Now, within your platforms is where the different opportunities lie. So what we sort of is the general rule is that an industry super fund won't have as many options as a retail product, but in saying that, retail options are often a little bit more expensive from a investment cost or a management fee point of view. The investment options that may be available under these platforms include pre-mixed options, sector-specific investments, right through to direct investments, which include term deposits or direct Australian shares. And we'll cover all those particular options over the next few slides. Now, under pre-mixed options, this is where the managed funds that may be available to investors include a growth style fund, a balanced fund, conservative, through to cash and ethical investment options. Now, a growth style fund, obviously we're looking at growth assets, so that's Australian, international shares and property. And in reverse, if we're looking at cash managed funds, this is essentially cash accounts and fixed interest products. If you don't make a nomination within your fund, you're most likely being placed into a balanced option. Moving forward, we're looking at sector-specific options, and this is where, for example, on the growth side of things, we can choose, an individual property-style managed fund, an Australian share fund, international shares through to cash and fixed interest. So it's set up into specific sectors, and you've got a bit more flexibility with how much of your funds you'd like to allocate into particular sectors. So, as an example, and what advisors look for, some may is trying to identify, where are the opportunities? Do we have confidence in the property sector? If that's the case, we may load up into that, and vice versa. Cash and fixed interest. If you're a conservative investor, we need defensive assets. These are the particular sectors that we concentrate on. Now, some superannuation providers include options into these other options listed on the page here. So, for example, index funds, where we're covering a particular index on the markets. And an example of an index is the Australian All Ordinaries Index. So, for example, if we can get exposure into managed funds which try and mirror an index, we can help lower ongoing fees for clients quite substantially. Emerging markets is another style of managed funds where we're looking at sort of growth opportunities on a worldwide basis, right through to shares, electronic traded funds and term deposits. Not all superannuation providers allow investors to have exposure into these options. The majority of the retail space does, but if you want exposure into direct shares, And for example, if you want to invest into, and this is a pure example only, Commonwealth Bank shares, some superannuation platforms allow for that. So it's best to understand what opportunities are out there, and what's the best suit for yourself. It's not just always the default option is the best option. Superannuation sort of deserves some of your attention because it is a long-term investment vehicle. The closing note, if you don't understand or haven't got the time to, give the respect your superannuation deserves, try and find the time to seek advice from a qualified financial planner. Thanks for watching.